The stock market is in panic, but what does it all mean? Let's have a look at a couple of charts. I'm Jared Johnson. Good to see you guys. It is definitely a big day today. Tariffs have been announced. The market has reacted. Everything is red. There's huge selling. Let's put into perspective really where everything is and how panicked the world and the market and so on should be. Here is the dollar index, first of all, and we're seeing a pretty big down day in the dollar index. It's been as low as 2% down today. And everyone's saying the dollar is losing its safe haven. Everything's going adios. The dollar will no longer matter, right? Well, if we look at this chart of the dollar index, you can see it has certainly been much stronger in past moments, and it's certainly been much weaker in past moments, right? Here's 2008, 2009, right? We don't have to look at all this stuff. But if we just look in kind of the recent history of where the dollar has been, we have seen kind of this 100 level on the dollar index. It's been hit September of 2024, got pretty close December of 23, July of 23, all the way back here. A lot of testing those levels in early and mid 2022. We're working our way back to that level. Is that really significant? I don't know. Doesn't really seem like it to me, but here we are. It's a big sell day. If the aggressive selling continues, then I'm watching levels below here, right? And I'm going to say, okay, well, if the dollar gets considerably below the 100 level, the dollar index, might be something to talk about, might be something to watch. Getting close to the 100 level, I don't really care about. But let's look at some other charts. Let's look at the S&P. Let's kind of see where things are. We saw this interesting ceiling up here around the 6,000 level on the SPX, 600 level here on the S&P, and it's down, right? From the highest point, which was about February 19th of this year, so not very long ago, to the lowest point, which is today, and it's actually bounced off that level a little bit. The S&P is down about 12%. Now remember, there are key levels that we watch in the S&P. We watch 10%, we watch 15%, and we watch 20%, right? 10% is a corrected market or corrective market. 15% is at midway there, right? 20% is the infamous bear market. We see 20% and we go, oh my gosh, everything's going south. But if we go back here and we peek a little bit at really the bigger, longer term is and where it has been, certainly, obviously, we saw 2020, right? This is very, I think, analogous of what we're seeing right now. Interest rates went to a place that nobody thought that the stock market and the U.S. economy could handle, right? So we see this high in January 2022, and we see that the S&P drops from January high to the October low of 2022 about 27%. We thought this cannot... The U.S. economy cannot handle 4 and 5% interest rates out of the Fed. Well, we bottomed out and had one of the biggest rallies ever. Okay, we handled it pretty well. We did see back here, this is 2008, this is went a little bit too far. Here is our 2000, or never mind, sorry. Let's take a little pit stop at COVID. Obviously COVID. We had a pretty big sell-off pretty quick there, 2020. We see this thing drop about 35%. Obviously, we're shutting down the entire economy. Big bounce back, right? Rate effects here, about September, October 2018 to just the day after Christmas 2018, 20% drop in the S&P. Big recovery there, right? So we don't have to go back very far to see that 20, 30% dips on the S&P are not that uncommon. We're here at about 12% after some behemoth rallies, right? You can't have a market go up forever without some corrections. And so we're seeing some early stage corrections there. Is this tariff business going to take the market into ultimate death and destruction? Maybe. It's possible. I don't know. But also, is this, technically speaking, a correction that the stock market has needed? Maybe. Let's look at the VIX here. I always like to watch the VIX because this is very telling. I've talked about this chart a lot. How worried are investors truly? Anything above this level, I call this kind of the danger zone, right? We start getting above 28, 29, certainly 30. I'm starting to say, hey, the VIX is freaking out. It's panicking. We could see much worse things coming. So far, we've had some stabs at it, right? This is December 20 of last year, 2024. This is August 2024. We had a huge run up there, but it recovered quickly. This is kind of March, and here we are back to it, right? Seems that we're kind of hanging on to that area. It seems like the market's kind of digesting the news and deciding what it wants to do with it. And so I'm just watching that level very closely, but I think, you know, there's a little bit of room. We're not totally up against the ropes quite yet. We look at the 10-year yields, right? This is something that helps determine interest. Yields are still high. They're still pretty high. If we look at kind of the grand scheme of things, this is obviously 2020, and we saw yields go from about 1/3% all the way up here into the fives, and here we are just about 4 flat. There's a lot of room to go there, and so it's going to be dependent, you know, is there recessions? Does inflation continue? How does the Fed handle this? But really where we are right now is not any kind of extreme place. It's not really any extreme place. We can look at any stock out there. There's certainly going to be some of those importing stocks. I've said how much I like Nike, how much I think Nike is an interesting play. Nike's got a challenge on their hands. Nike has to figure out how all of their building and their China operations can be worked out there, right? Nike's going to feel some pain. But also, does anybody feel like buying Nike at 2014 levels? I do. I think that's a great spot. $50 on Nike looks real interesting to me, especially as it's coming off of some of these bigger levels we saw, you know, in 2021 around the 180 levels. So Nike looks interesting, right? We're seeing some of these big imports, right? Target, you know, and everything. But Target had way bigger issues long before tariff news. You can see these big kind of attempts to go higher here in 21, and then interest rates hit. We kept putting these highs in, and then it just was c'est la vie for Target. Does Target get interesting back around $90? Maybe. I don't know. Maybe. It's getting pretty close to that area. Are there other spots to watch with some of these stocks? Are there going to be other buying opportunities? I think so, but we need to let the dust settle and see how things play out. This is either going to go down in history as one of the smartest moves by any U.S. administration, or it's going to go down as one of the silliest and everything was terrible. But all I know that I can do as a trader is watch for areas, be prepared to take advantage of some of these once-in-a-decade buying opportunities. I would like to remind everybody that when stocks sell off, everybody says, well, last time everyone thought this was a once-in-a-lifetime buying opportunity, and it's not this time. That's what's said every single time. I've been in the stock market for 2.5 decades, and that's the same thing that we hear constantly. This time it's different. Everything's going to be way worse. Interest rates going to 5% really will kill the entire economy. COVID and shutting down the economy really will kill the entire economy. 2008 and real estate and mortgage crisis, that's going to kill the economy. What happens after those situations? Usually a pretty strong, pretty solid rally. Right now, it looks to me as though the Trump administration is trying to really have some strong negotiating chips. The U.S. economy and the U.S. consumer is a big one, and it's one that has been probably not so fairly looked at over the years. We've been paying heavy tariffs to go into other countries and not charging much to have goods imported. Maybe it's time to balance things out. Your call, but let's see what the market does and how it reacts to that, and if that gives opportunity for global trade rebalancing. These things are painful. Change in the market, economic change, financial change is never painless. But will the after effect be a huge benefit or not? Time will tell. I think that there are just interesting things to look at. We see, a lot of really kind of technical patterns and technical things happening. Double tops in the Nasdaq and the triple Qs here. We see, breaking out and causing some downward movements. And so we're just going to watch. We're going to see how all this plays out. We're going to see where everything goes. But I think we're in a place where there's more opportunity than not. So let the selling happen, let the panic ensue, but be looking for opportunities, and just know that wherever we are, we're seeing, in recent rallies, we're seeing small pullbacks. Everybody is always going to think that this is something that's going to go like this, right? And maybe it does, and maybe it doesn't. Let's just be ready for opportunity. Let's be ready to take advantage of some of this, and let's see where it takes us. So keep your head on straight. Don't let all the selling panic you to death, and let's see where these markets go. Good luck, everybody.